Dara, thank you so much for joining us. It's great to have you here in the studio.
Great to be here in person.
In person. So you just made some remarks at the UBS conference. You said you're tracking towards the high end of the range for your quarter, and that means profit closer to $75 million than $25 million. Is mobility or eats driving that?
The answer is yes. Actually, last week for us was our best week ever in terms of volumes, and mobility volumes now last week were pre-pandemic highs. So the world, despite Delta, Omicron, et cetera, continues to reopen. And as the world reopens, the mobility business continues to get better and better. And then on the delivery side, delivery is incredibly sticky. It's a great experience, and we're adding grocery experience to it as well. So the delivery business is also hitting all-time highs, which makes the whole company hit volumes all-time highs last week. That we do think is going to translate into profits. And at this point, we're confident that on an EBITDA basis, we're going to come in at the mid to high point of the range that we gave earlier to our investors. So far, so good.
So let's start with delivery. How do you keep that growth going as the world reopens?
Well, what we've seen with delivery is that it's a sticky habit. It's a little bit like Amazon. People used Amazon pre-pandemic. There was an acceleration. And the majority of people who experience the delight of any food, any restaurant that you want within half an hour, they tend to stick around. So we're seeing delivery audience growth of 25% on a year-on-year basis. We're seeing frequency grow, and we're seeing basket sizes grow as well, which translates to very strong delivery volumes, and we expect those volumes to continue. We're also adding selection, not just selection of restaurants, but now we're adding grocery, convenience, GoPuff, so that essentially if you forget toilet paper, et cetera, you can order on Uber Eats and you can get it inside of half an hour, which again adds to the frequency use case of our service.
Now, mobility, new post-pandemic high. Will it ever surpass pre-pandemic levels again? And if so, when?
It absolutely will surpass pre-pandemic levels. And for example, if you look at mobility bookings in Europe, they're already higher than pre-pandemic levels today. Same thing in Latin America. On a relative basis, the US and APAC are lower than pre-pandemic levels, but we see it over and over again. Every use case is coming back. Workday use case, weekend use cases. Travel's trailing a bit, as you would expect, but the pattern that we see over and over again is as cities open up, as countries open up, volumes actually come back, and they eventually exceed pre-pandemic highs. I can't tell you exactly when, because I'll be trying to predict the health circumstance, et cetera. It's difficult, but I am quite confident that next year we will be hitting records, all-time records in terms of mobility bookings. I'll make that prediction now.
Okay, good to know. All-time records next year in mobility.
Yes.
Omicron, though, the threat is rising here and around the world. Are you seeing any impact? Is it impacting airport rides? And honestly, how worried are you?
So we are not seeing any kind of an impact in our business as we speak. Again, last week was an all-time high for our mobility business. This is an uncertain world. And I think we as a company now, because of the global nature of the business, some countries open up, some countries might be closing down, et cetera. On average, the world is getting better. The efficacy of our virus, of our meds are getting better, vaccines are getting better, treatments are getting better. The world now, on average, is handling the virus better, and as a result, that shows up in our mobility business. I think the second factor for us is the delivery business is now bigger than mobility. When we went into the pandemic, the delivery business was about a quarter the size of the mobility business, wasn't yet profitable. And one of the new, I would say, trends that we pointed out to our investors is that we actually expect delivery incremental profits to be at or above our long-term margin targets of 5%. So not only do you have a delivery business that's bigger than mobility, it's a profitable business that's going to push incremental profits. So we're now an all-weather company. And I couldn't say that coming into the pre-virus, but now post-COVID, we're an all-weather company, and I think we can succeed and grow really in any environment.
Well, one thing that we're all having to weather is this wave of crime happening across the country. Flash mobs hitting retail stores. Carjackings are up. across the United States. The Wall Street Journal reported that Uber drivers are wearing bulletproof vests and avoiding the night shift. What are you seeing and hearing from drivers? Is that happening?
So I think the trends that we see in terms of violence in our society are incredibly unfortunate, and hopefully we will act on that and come together and act on that. What we are seeing on our platform, though, is that incident rates, whether they're accidents or person-to-person incident rates on our platform as a percentage of rides, and this is something that we track really, really closely, are actually coming down. Now, that could be happening with an environment that's getting worse, so we have to be even more reticent in terms of making sure that our platform is the safest platform, transportation platform on Earth, and that drives us to innovate. So, for example, one innovation that we just announced is audio recording on your rides. This is something that we delivered in South America already. We're launching a pilot in 3 cities in the US. And what we see is that when you know you're being recorded, you behave a little bit better.
Right,
as
so
I
riders
am
can
right now with
record
you,
the
you
car, riders can record the ride, and drivers can record the ride,
Correct.
right?
Correct.
Okay.
And the correct notification goes out. So all of the audio is kept private. Uber doesn't even have access to the audio unless there's an event and we need to look at it. So it's entirely private until needed. But what we see is it's a deterrent in terms of what could potentially be bad behavior. Another example of safety that we're delivering is that there are some payment types that allow you not to identify yourself. Let's say a gift card. If I get you an Uber gift card, you can take a ride on it without identifying yourself. During those circumstances, we will have you provide your identity, whether it's your license or social media, et cetera, to make sure we know who you are, which again is a deterrent and a safety feature that really drives better behavior and more safe outcomes. So we know what's going on in society. It's really unfortunate, but we keep innovating in safety both for riders and drivers, which is pushing down incident rates for us.
So are you saying you're not seeing an impact on carjackings for Uber drivers themselves? I mean, Uber drivers make up a significant portion of the drivers on the road now.
If it's happening in the world, it's happening on Uber. We're a reflection of society. So I'm sure it's happening in some numbers, and it's something that we will make sure we take care of and make as safe as possible. But the innovations that we're driving for safety are absolutely making the platform safer.
And when you say we need to come together on it, I mean, what would you like to see? More broadly?
To me, it's less about Uber. It's about dialogue. It's about, you and I having a conversation that takes longer than 30 seconds or, 150 something characters. These kinds of discussions I think, show us that we have more in common than we would be led to believe. And I think sometimes there's an over-dramatization in the press, which is unfortunate. So let's have good, long conversations, and I think we'll get to a better place.
How does driver supply and turnover look right now? We just spoke a month ago, so just curious if there's been any updates and how long drivers are sticking around once they do return.
So driver supply generally continues to be constructive. We leaned into supply in Q2. We are continuing now to innovate around driver sign-up. Previously, we would say, hey, do you want to drive people? Do you want to deliver food, et cetera? Now we have an onboarding process that we call modular onboarding. Give us your information about your vehicle, yourself, et cetera. When you're ready to deliver food, we'll tell you you're ready to deliver food. So drivers can come and earn much faster on the platform. As they earn faster on the platform, a greater percentage of them are on board. And earnings are now really high for drivers, $35+ in our top 20 cities. And that is definitely causing drivers to stick around and increase their hours on the platform. So the trends right now are positive, but we understand the labor situation, and we have to keep innovating to make our earner experience better and better and better on the platform.
So on that note, a lot of drivers say they want to deliver food instead of people these days. And you're competing with DoorDash, you're competing with GoPuff. Why should and would a driver choose Uber post-pandemic over some of these other options?
Well, I think the great news on Uber is drivers can choose Uber and they can deliver people, they can deliver food, they can deliver groceries if they want to. So the flexibility that we have on our platform, people talk about super app. We are the earner super app. You can come onto Uber and you can earn any way that you want. And the peak periods, for example, of driving people are different from the peak periods of delivering food. And depending on your mood, I was actually talking to a driver and thanking him for helping us, and he was delivering food, so he could talk to me at the same time that he was delivering. So I think the great thing about our platform is drivers can choose, and there's no platform that's as flexible as our platform, and we think that's a structural advantage over all the monoline competitors.
DoorDash says they can now deliver things in 10 to 15 minutes. They're hiring couriers as full-time employees. What's Uber's response to that?
Our response is we want to partner as it relates to delivering incredible and delightful grocery experiences. So for example, we have GoPuff, which is a terrific partner on Uber Eats. I used them the other night, unfortunately for ice cream, but it got to me inside of 20 minutes, and it was a great experience. And my being able to have that experience on Uber Eats and are partnering with a player, GoPuff is obsessed with just building these stores, et cetera. I want to partner with the best of breed, but we'll be watching, this is very, very early as it relates to this environment, and we'll be watching and testing, but partnership is our first priority here.
The GoPuff co-CEO, Raphael, was on the show just yesterday. Will we see you get into this business, though, independently in a meaningful way?
I don't see us doing it in a meaningful way. I think we're getting into the business in a meaningful way through partnership.
Yep.
And, Raphael is obsessing 100% of his time on building stores, et cetera. I'm obsessing 100% of my time on building networks and pricing and matching and the platform benefits that come from Uber Eats and rides and launching Uber One. It's a different focus, and I think we can work together to make an absolutely delightful experience for eaters, which is, in the end, what I'm solving for.
So what about grocery? You've mentioned it a couple of times. How are we going to see that scale? Is it going to be big buys? Is it going to be organic growth? Are we going to see you build it from scratch?
All of the above. So we have brought Cornershop. We made an investment in Cornershop, and we own 100% of Cornershop. Cornershop is the Instacart of Latin America. Outside of Latin America, we are building organically. Our grocery business is now at a $3+ billion annual run rate. We expect to see that double plus, but the growth going forward is really going to be organic, and it's about bringing the Cornershop experience and all of the detail obsession that team has on customer service and blowing it out globally as it relates to the Uber Eats and the Uber Mobility audience.
You're in the firing line of EU and UK regulators. What are your contingency plans there? And could this derail profitability?
Well, I think our plans now are very similar to what you saw us with Prop 22, which is the vast majority of our earners want flexibility. That's why they come into the platform. They can get jobs anywhere. You see the labor situation. They can opt in for full-time jobs, but they come to our platform to earn in a flexible way, most of them in a part-time manner. And we think the worker designation, for example, in the UK that now has been verified, we think that is the way forward, which is flexibility and benefits. And we think that it makes delivering on Uber or driving on Uber more attractive to earners. And we're leading into that vision. So we hope that we'll continue to have dialogue with regulators to move in that direction.
But what if more regulators in other countries go that route?
Well, I think if more regulators go that route, that's good news. We love IC Plus as a company, and more importantly, our earners love IC Plus. Now, there may be some countries that flip to an employment model. And for example, Spain and mobility has flipped to an employment model as it relates to mobility, where we work with fleet partners who employ drivers. Our bookings in Spain are up 40% on a year-on-year basis. Our margins in Spain are close to our long-term targets of 8 to 9% of bookings. So for us, we can adjust as a company to any model. The question is, what's good for earners? And a model that retains flexibility for earners and then also provides them with benefits, that is the best end state for earners, and that's why we're sponsoring and leaning into it.
So on that note, everyone is still noticing the sticker shock, and maybe at some point it will wear off. That prices are still elevated, like 30 or 40%, according to the data that we're seeing. Would Uber ever subsidize prices, or is this just the new Uber? Prices are higher, and maybe they should be.
So I think that we see inflation everywhere. right? The price of used cars, new cars, fuel. There is an element of underlying inflation that's affecting all of us, grocery prices, et cetera. But at the same time, the supply and demand imbalance that we've seen in the past causes surge that increases prices more than, let's say, core inflationary levels. Surge is now coming down. As we improve supply-demand balances, the percentage of sessions that are surge are coming down. Our ETAs nationally are now below the magic 5-minute mark. In New York, they're less than 3 minutes now. So the service levels are coming down. I do think that the price of Uber is going to be higher than it was, similar to the price of everything right now, frankly. But we are working, as we improve supply and demand balances, prices will naturally come down, which we think is a good thing for consumers, and it's a good thing for us as a business too.
Okay. You've got a brand spanking new office in Mission Bay. Haven't been able to get the whole company back there yet. How much time are you spending there?
I'm spending about 3 days a week there. It's energizing. It is a spectacular space. We're getting teams there now on offsites talking about strategy planning for 2022, and it's just a total jolt of energy. Ultimately, I think hybrid is the right answer. Like my working from the office is a treat because my working from home all the time got old. But it also allows me, when I work from home, it's a treat as well. So I ultimately think a hybrid environment is a great environment. But for Uber employees who come to the office is dynamic. The food is even better.
Uber's got out of the dating game, no date for return. Same with Google. Lyft is now saying employees don't have to come back until 2023. I mean, is that extreme, or where is this going, and is this really forever? I
think hybrid is forever.
Yeah.
But I think that I believe a high percentage of our employees, when it's safe, are going to want to come to the office.
Yeah.
I view the office as a pull. It's when you go there, the energy, the efficacy, or having this kind of a quick conversation, et cetera, that we think is going to pull employees to the office. But ultimately, we want to give them a choice. Yeah. We want them to come to the office when the time is right and when they feel safe.
And that'll be this year, you think? Next year?
I hope
next
so.
Year, 2022?
I think it'll be next year. I'm optimistic that it'll be next year, but I've been accused of being optimistic before as it relates to the virus.
All right, well, we appreciate you taking the time to join us here in the studio. It's wonderful to see you in person after far too long.
Yes.
So thank you for joining us. It's great
You're
to have you,
welcome,
Dara.
and I look forward to more.